You Can Be a Stock Market Genius by Joel Greenblatt is a highly regarded book on special situation investing. Here's a breakdown of the key lessons from the book, arranged in a step-by-step format. 1. Special situations. Focus on special situations like spin-offs, mergers, restructurings, and other corporate actions that create investment opportunities often overlooked by the market. 2. Spin-offs. Spin-offs can offer significant opportunities because the parent company's shareholders often sell off shares of the new entity, leading to temporary undervaluation. 3. Restructurings. Look for companies undergoing restructurings, such as asset sales, division closures, or management changes, which can unlock hidden value. 4. Merger securities. Securities issued in mergers or acquisitions can sometimes be mispriced due to their complexity, offering attractive entry points. 5. Risk arbitrage. Engage in risk arbitrage by investing in announced takeover targets. Understand the risks and potential returns in this strategy. 6. Bankruptcy and liquidations. Companies emerging from bankruptcy or in liquidation can provide opportunities to purchase assets at distressed prices. 7. Rights offerings and recapitalizations. Rights offerings allow existing shareholders to buy additional shares at a discount. Recapitalizations can signal changes in capital structure that might create investment opportunities. 8. Asset plays. Identify companies trading below the value of their assets, such as real estate holdings or intellectual property, which are not fully reflected in the stock price. 9. Management incentives. Pay attention to management's incentives. If management has a significant ownership stake or stock options, they are more likely to act in shareholders' best interests. 10. Research. Conduct thorough research beyond headline numbers. Dive into financial statements, management discussions, and footnotes to uncover hidden value. 11. Patience and discipline. Be patient and disciplined. Special situations can take time to play out, and it's crucial to stick to your investment thesis despite market fluctuations. 12. Focus on small and mid-caps. Smaller companies are often overlooked by institutional investors, creating more opportunities for individual investors. 13. Avoid herd mentality. Don't follow the crowd. Special situations often involve going against the grain and investing in unloved or misunderstood stocks. 14. Continuous learning. Stay informed and continuously educate yourself about different types of special situations and investment strategies. Implementing these lessons. 1. Identify opportunities. Use financial news, SEC filings, and specialized databases to identify companies involved in spin-offs, mergers, and other special situations. 2. Analyze fundamentals. Evaluate the financial health, asset values, and potential earnings of the company involved in the special situation. 3. Assess management and incentives. Research the management team's track record and their incentives to ensure alignment with shareholder interests. 4. Monitor developments. Keep track of any updates or changes in the special situation to adjust your investment thesis accordingly. 5. Diversify. Spread your investments across different types of special situations to manage risk. By following these steps and lessons from Joel Greenblatt's book, you can uncover unique investment opportunities and potentially achieve superior returns in the stock market.